Ronit, now that we know everything that you have on your mind today, but we haven't seen the pictures, so we haven't seen your charts. So looking forward to talking to you, and welcome back, buddy.
Hi, Dale.
Hi, Ronit. Yeah, got
How you
you.
doing?
Good.
So,
Good. So you have a lot of conviction across the board. You usually do, and I like your intermarket relationship work that you're doing. But I saw this. You sent this to me on Twitter. So what are you trying to say with PEs that it's we haven't quite gotten to 2000 levels, but it's still extreme?
no, the price doesn't matter. It's the cycle. If it
Okay.
hits a focal point, so it's something like what you do with an ECG machine. How does a doctor know that you are going to have a heart attack? He actually sees what is the peak in the trough. What generally quants do is they see for that cycle, wait for the cycle for a price confirmation.
Okay.
So that's X and Y coordinates where they match. If you actually get in between that, you're actually going against the trend. You're not able to understand why it would do that. And then when you're actually short and it goes up 30% and then it falls, you're right on the trend, but the timing is wrong. So people say that the timing is not accurate or something like that. So anything and everything is possible. So even in Indian horoscopes, we actually see when a child is born or something like that. So we see the location, geolocation, and the time period down to the second. So from there, we start projecting which year there would be a vibration, or we would have a good time or a bad time, something like that. So all markets do. So everything, we are all created with atoms and vibrations. So all you have to figure out is even price to earnings has a cycle. I just wanted to show it. I wanted to start with that. So that's the real idea, that it's not just price to earnings. It could be a weather pattern. A weather pattern could peak at a particular point, or turn around at a particular point. So people say it's climate change, but is it? Do they really understand what is climate change?
I think they said that Gans spent some time in India. Is that true?
That's correct. I've not seen it because I'm not 100 years old still. But
you didn't meet him?
No, I didn't meet him. But I actually dreamt of him. I did dream of him. So that was 2009 when I actually got it, and then I was mesmerized with this. So that's when I found out, oh my God, this thing actually works, because I was a little bit slightly good at calculus and trigonometry. So it's all about angles and pressure points. And Gann was actually studying the same thing. So it's a planetary action. What is the behavior at a particular point? People get wild at a particular point. What actually affects the markets? If you really see, most of the learnings in markets, if you go back pre-1940s, you'll actually see that it still works. It's plain vanilla. So what's right now? Yeah, it's the natural law. How do you know that there are 30 days in a month? Anybody in the panel? They can answer it. Why there are 7 days in a week?
It's a number of completion.
Yeah, it's some kind of start. If it starts, it completes. So something like that. It's like these gears.
But why 7? Why 7 for a week?
Basically, 7 is it's like it follows the lunar cycle. 28 by 7 means four lunar cycles.
Got it.
So it goes with the birth of the baby or a kid or something like that. And if you calculate that, it actually has a rhythm. So it's cyclicality. It keeps moving up and down. That's why even pi is nothing but 22 by 7. So you'll find it really strange. Why there are 21 days in a 21-day moving average or 20-day moving average? Why do they use it in the Bollinger Band?
Why they use 21?
Yeah, 20 or 21.
I don't know.
Basically,
3 weeks.
There are only 20, or on an average, there are only 20 days in trading days in a month. Yeah,
that's
8 days in holiday. So it's a weird thing. It's a pattern. So and if you
I learn from you every time you're here.
Okay.
I never even thought about it. Why it's so popular to use 21.
Yeah,
Okay,
because
moving it.
it's, and even RSI 14. Why would they use RSI 14 on a day? Why 14? It couldn't be 13.25 or 15.6,
Well,
something
people have
like that.
tried to convince me to use different days on my RSI instead of the standard 14. But why 14?
It's the lunar cycle, nothing more than
Oh,
that.
2 weeks.
It's slightly above the lunar, which is 14
Oh,
divided by
between
21.
new and full moon.
Yeah, yeah. Basically, 14 divided by 21 is approximately zero point 0.6.
Khalid El Ghuli uses a 9 for an RSI. Is
It's
there?
possible. 9-day cycle is something like 2 weeks. Five.
Okay.
So it's
Okay.
like a sync. Yeah, it's not important indicator use. You just have to pick a day. That's why
All right.
most of the algos or other things, it goes into Monday, Tuesday. They place the trade on Monday and they finish on a Wednesday or Thursday. Certain programs work on that, so that's how
Okay.
it is.
So what are the
So
big trades for this fall, Ronit?
I think I'll discuss that one by one. What's
Okay.
happening? The biggest trade, I would say, the theme of this whole thing will be long crude oil if it crosses 82 and short all indices. And we are
Okay.
actually going to experience something like a big sell-off between now and November 1st. Why? We'll come on to it one by one. So this is PE ratio. You can actually see, I just wanted to start off with something different. So as we
Okay.
discussed last time, Fibonacci is actually gave a signal on February 2020, just like September 2008. This is the Dow cycle for the last 100 years. So it flashed September 2021. Many people have that we actually down more than 4 or 5% from all-time highs. The high was made in September, I think. Okay.
Okay.
So we
Okay.
can check in the next chart. You can see it very clearly. February, we started crashing. September, we hit that high around that point. Now it's actually trying to hold that 33,700. The moment it breaks that, that's actually 4320 or 4300 on the S&P 500. So that breaks. The reason could be because of energy, and the sector is hot. Many people never thought that from $50 or $60 is going to go higher. Now everybody is like $80. So now we have to be very careful with this. So we should see that in the chart. So this is
Okay.
if you are actually using digital stop loss, that is, you can use this level. So 33,777. Every time it goes there, it actually tries to bounce back and to stop a sell-off. You can call it, they're trying to artificially game it, or you can actually say it's just a level which is important. If that breaks, 32,000 will be out in a flash. You can just blindly actually place
So
the bet.
this is a monthly chart right here? Because I see
Yeah,
the
that's
big
correct.
red candle. Yeah.
Exactly. So
All
you
right.
can see that it hit 35,651. And these are not like horizontal cycles. This is kind of programmed cycle. So every month there is a value change. So it's not the same thing always. It's not a horizontal line.
The
So,
first chart, was that the Schiller case PE? Is that what it's called?
that's correct. That's correct.
Okay.
That's there.
All right. Okay.
Okay, so let's move on to S&P 5. If you really see, it's holding that 4,400, where I think even Blake was talking about that 4,420. Yeah,
Yeah.
is great. But once that 43.98, it starts trading below it, the next official target is 41.23 and 3,800, and it goes like that in steps. So you can call it waves, wave 3, wave 4, wave 5. But if you use those levels, you can actually start placing better bets, and you can actually use those levels. Hello, can you hear me?
Is a stronger dollar one of the catalysts for this?
No, I think that it has to
It's
recall.
just crude.
Like this is Nasdaq.
Yeah, I know, but crude is the major catalyst. So the inflation
Yes,
pressure from energy.
it's
Okay.
actually rate of change of crude. So if you have a rate of change of 20, that's a lot. Or that is a lot. Because even natural gas, when we were discussing it, was like $2.5, which was in
Yeah.
April, and
Yeah.
we were talking about 17. It's almost halfway, $7, close to $7.
Yeah, we know
And
that you have sound issues. Well, your next winning trade, you have to do something to, fix. Either get a better internet connection, or I don't know what you're
okay.
using for a mic. But you're breaking
Okay.
up a little bit. But go ahead, keep
Uh,
going anyway.
okay. So the NASDAQ is actually the real icing in the cake. So 4,500 is where the break which happens. So this is because of energy only. So once that 14,500 starts cracking, you can actually see next level around 12,800 to even 7,300. So you can see the divergences. Even 1997 Asian crisis, there was huge divergence. Everyone moving RSIs. See the
Okay,
divergences.
I know you're bearish, and I know your numbers for breaking down. Is there still a chance, based upon your cycle work, because I look at some of this stuff and I try and look at both sides of the trade. Is there anything that you see that could give us one more marginal new high in S&P, say 100 handles above the old high, I think was 45.50 or something? Is there a shot for one more high into year end?
It's possible. And that's what I said. If it holds that 4,400, then it's certainly possible that it can make one last high to like 37,400 or something like that. It's possible, but most of the work which I I really doubt it.
Okay.
Because September is a critical month. This is the most important chart, which this is debt to US oil, that is WTI. Now, if you really, the orange line, it's threatening to move below that. The next level is $100. Above that $100, it can actually go crazy even to $3 if it has to go to June 2008 kind of things. So, that's where the energy problem rises. This is anyway, federal debt doesn't change. So as long as the debt keeps going up, there is a possibility that oil prices will adjust to that. But technically, it's breaking down. Okay. So this is oil. You can actually look at monthly pressure points. So the minute it broke above 77.8, that was it. That it's going to go to $88, $89 first, then 97. It's just going parabolic. So there is something happening behind the scenes which says that even the dollar reverse.
When we pull back to the broken trend line before that happens?
It's possible. That's why it's $0.50 stop loss. $80, you can actually keep it as a pivot. The reward is in the long side. So you keep $80 as a stop and you can actually just play it. On a monthly cycle, you can be very bullish till it's 77.8. The reason is that if everything starts selling off, I don't know if oil will hold up or not. But there is a possibility that oil will hold up and start hitting 127, 130 before it reverses. So this is again same broken down levels. You can see it tested that $78 this year, then came back all the way close to 60, 68. It actually just started going up. So 77.8 next level. We could actually be seeing $99 within this week or next week. So it's about rate of change. Now this is natural gas. Now natural gas is taking a breather. So because oil is taken over from 74, 75. So natural gas is actually underperformed by 20% against US oil. But you can clearly see that once it broke through 3.74, it is actually hitting 7.24 next. So it's doubling. So it starts going up to 10, something like that. So each slab is something like $3. So energy is the real theme. And you can actually see the breakout from 2006, 2008, where there was a great crash of hedge fund, which actually was long natural gas. So that's around $12. So my guess is that if natural gas has to go up, you have to buy above 5.9, and till mid of next year, it'll keep going up. So that's a particular thing. It could be a 7. So I'd watch for risk levels.
Okay. So is it possible natural gas could pull back to like $3 to your next cycle?
I doubt it, but possible. Why? Anything is possible in the market.
Okay. All right.
Here evidence that it will not pull back because CRB actually has broken above 200 or something like that. So we are targeting something like 300. So CRB is a basket of commodities. So if 300 is from here, we are actually going to get 50% movement from here approximately. So can you hear me?
Yeah, got you.
So this is a GAN fan on the same CRB. You can see over there, the breakout was elections. So once that actually broke, it just didn't stop from there. So somewhere from April to July next year, all commodities are actually outperformed by 30 to 50%. Talking about the markets. So this is the real pattern which I'm observing in crude oil. This is actually called a GAN grid. So first target is you can actually see each grid, it's moving at the rate of $7 for each grid. So it can hit 130, pull back all the way to 95, 90, and then double up from there, which is around 190. This could all happen very fast. As you can see, the black line, that's actually the time within which it is supposed to happen. So I'm expecting 130 at least by Feb 2022. We'll see how it goes.
Wow, that's 4 or 5 months, right?
Yeah, not much. Now, this is the real hint. US oil actually, the WTI is actually out, it's going up with dollar. So that tells you that the dollar doesn't matter. There's something else happening behind the scenes. So even if the dollar actually outperforms by 10%, there is a possibility that this is breaking out. So this is nothing but WTI into DXY. So it's showing a lot of strength. And the cycle point was lower. It's not higher. So it's kind of highly inflationary. This is one more interesting thing. Crude oil into USD CAD. So if USD CAD has to go down, that means Canadian dollar has to appreciate. That means oil is going substantially higher. So if a parity hits on USD CAD from say 1.25 right now, it could be 130 or 190 before the dollar turns around. So you can see that over there. You just divide WTI, this 130 divided by 1.04 or something like that. That will be the value of crude. You with me, Dale?
Yep.
So this is extremely short term for crude oil. You can use these levels, 79.8. You can keep the stops, keep running. I'm looking at 99 within very short period. So it'll catch everyone's attention. So what is the risk reward? 0.5%, 1%? That's good enough, I think. Hello?
I got you.
Yeah. So
I'm writing things down.
Now there's one interesting factor which is happening. Everybody's arguing that look, everything is going up. Not really. If you actually study 1970s to 1980s, copper actually briefly outperformed and underperformed. So here, what is happening from 2003 to 2020, actually the WTI underperformed against copper. Now, it actually, energy is outperforming even copper. So this is a pattern. Can you see that pink line, which is actually breaking out? That means copper could be not going up so much if it crosses 19 ratio, which is like 25. If it hits that 25 mark, that means copper could be like 10% up, but crude oil could be like 100 plus, something like that. Okay, so 19 is that ratio.
Long oil against everything.
Yeah. Basically, it's oil. Oil is the blood and soul of everything which moves around. They call it shortage, but is it really shortage? Now, this is the real FX move, which I'm actually thinking, what if USD yuan actually goes to 5 from 6.3? Because nobody in the media is actually talking about if USD CNY actually starts appreciating against the currency, against the dollar. So how deep could it go? And we have seen it time and again in 2008 also, when there was a spike in oil. Crude oil was, USD CNY was actually, CNY was appreciating against the dollar. Every time it did that. You with me?
Yep.
So what's the next chart?
Okay, you're getting some nice commentary of, some good insights into the future. So you're...
Okay, this is a real good one. So this is a real good one where we actually see that what I did is the main chart is Euro USD divided by USD CNY. So every time it actually went up, crude oil actually went up. That means one of the entities actually started being inflationary. If Euro is going up and USD CNY, so you cannot actually see dollar index is going up because Euro is going down. That could be a different problem. But what if USD CNY starts appreciating? So that's what causes this inflation you can see over here. Now, what I did is to check out these cycles, you can see that Euro is long Euro USD CNY. Now, if if that 0.27 mark has to hit, what should be the value of euro? So what it did is a simple math. Let's say phi is the USD CNY into 0.27, 0.272, 1.37. That could be the value of the euro. So it all adds up that next year is going to be the real big change. After that, the euro could actually go to zero or whatever, depending on what they actually do with the jabs and other things.
Okay.
So this is again the dollar. US dollar is still not breaking out. It's still very sticky around the 94.7. You can see that when there was a crash last year, it actually held that point, 94.7, and is actually testing on top of it. So
that's right.
Yeah, we're not sure that, and you can actually see the RSI is actually topped out in the daily time frame. So you have to be very careful that 94 is not bullish. So you have to watch what the currency is doing. If the copper is falling or crude oil is actually backing off, that is a strength in the dollar, not otherwise.
So if we got a pullback to 92, which looks like a big area to you,
do not buy it.
Huh?
Do not buy it.
Okay, but if we got to pull back to 92, maybe that would be enough to lift the market to one more marginal new high.
Possible.
That's what I'm thinking. It's not going to do it with the dollar exploding. And now that you've come here and shown what a critical area it is, I mean, I know Blake's been shown the 38% fib retrace there, but yours isn't based on 38 fib, is it?
No.
Yeah.
No.
Okay.
Okay. So this is
then
dollar
you're looking
index.
for 80. Wow.
I'm looking for 82 by next year. So that's around 10%. That's good enough, I think. Most currencies don't move more than 5% or 10% per year. So if you really see euro, actually it's down by 5%. That's it for the year. So it's kind of contained, and you can see inflationary pressures start only if this 82 is broken. We have seen it time and again in 1988, 89, 87. Then the real inflation came post 2006, actually. So this 82 to 90 band is the real decider. And you can see that semicircle, it actually completes the high. It joins around Feb or 2022. So July 2022 could be 190 oil. We don't know yet. But that particular point of 94 is very critical. You have to watch it. For those people who actually want the lows, exact pressure points, this is the chart. So 94.84, yeah, it's very bullish. But if it doesn't cross that and it starts breaking down next time, 89, do not catch it. You can easily catch it around 89, 82, or 83, which is a trend line. We have to decide at that point what exactly is happening with commodities. Maybe commodities peak at that point, and we have another route of deflation like 2008 suddenly.
Okay.
So same thing goes with 1985 pullback. It needs to recog. That means it has to hit that pressure point where everybody says dollar is going to collapse. And at that time, it just lifts off. So that is what I'm anticipating on that. This is again copper chart, which we were showing 5.6. It's not completed the pattern. This is a parallel channel, if you see copper. So it could hit that 5.6 and still underperform crude oil. So if crude oil doubles and this thing goes up by 30%, you can technically be long oil and short copper. So it's not you're going to make money. So for those people who want exact levels, 4.6, 4.29, and 3.98. In July, if you observe that there was a rout in all markets, and copper stopped exactly at 3.97, 3.98. So somebody pressurized it, and you can see that in 2011, that was a high. So these pressure points are easy to know that if these points are held, then they're actually changing the narrative behind it, that it's not just time.
Okay, well, you have time for one more look, and then we have to wrap it.
Yeah. So 10-year bond yields, this actually is going to take off. So 2.14 is where all the central banks starts panicking. That means oil has gone above 82. It's actually inflationary. And you can actually see British pound yields also is taking off. We can see that in the next chart. And we have I have a target of something like 2.5 to 3 very easily, because if oil is going to 120, then all yields are going up, irrespective of what is going on. I'll show you quickly. I'll run through British bond yields. You can see it's breaking out in a long-term channel. So nobody can imagine a 4% yield on a British pound, British UK yields. And it's actually forming an impulsive move. You can see over there, there is a triangle from
Buy
2011.
real estate if you're right.
Yeah, but it's better to buy something in oil. So that would be
Okay.
better, and hedge it with real estate. Maybe you can actually buy a real estate and pledge it and then buy some oil with it.
I would think
So
that
if,
would crater everything, 11% rates that you're showing as a
no,
possibility.
but fixed rates are there. You don't take a floating rate when you borrow.
Okay. Okay.
So this is very important. If this is a financial crisis or a monetary crisis, then
Yeah.
gold would take off, because gold to crude ratio is around 30. So anybody who wants to be bullish, they can actually be long 1755. That means once it takes out 2010, then you can actually be just close your eyes, be long. It could actually go to $8,200 according to my calculation. So you see that 2060, it's almost like 4x times, and this could be in a very short period of time. It's actually very bullish pattern. So
Well, that's what happened in 79. I mean,
exactly.
and 80. Yeah.
It was 1976 to 1980. That was a 4-year time. So right now it's like 2021. We could expect that by 2025. So parabolic rises. Again, the euro is actually very critical at that 1.156. Will they allow it? I don't know. But 1.1516, you can see that long-term support coming in over there, and the channel breaking down. So this, if euro is breaking down and gold is going up, that means it's a monetary crisis. Immediately you understand that they're going to actually introduce CBDC, because even in India they started it in 2016. Not many people know that the cash ban actually started in 2016, not 2020. So
they're going to
this
issue
is
what?
again,
An SDR?
yeah, SDR or a CBDC, central bank digital currency, where actually they don't allow you to buy gold, silver, or any inflationary thing which you can hedge it with. Because even government of India is actually trying to launch CBDC in December 2020, 2021. So there is something in sync with other central banks. So they are moving forward with this. So that means that is the precise reason gold and Bitcoin actually took off. 2016, if you carefully see Bitcoin, it was around $200 in the beginning of the year 2016, and it started skyrocketing post demonetization.
All right, show it one last chart, and then we have to go. And why don't you show us Bitcoin? Since I saw that you were kind of bearish Bitcoin.
Yeah, but I'm not prepared for that. I just want to show you more than Bitcoin, which is soft commodities. This is lumber.
All right, we have to wrap.
That?
It's after 6.
I'll show you one last chart of wheat. Actually, this is wheat. Actually, it's breaking out a larger trend line, and it could triple from here. So 743 is your base level. It's going to go to 2400 or something like that. It's doing something what lumber is doing.
Yeah.
Okay. So 743, you can have a stop, and then you can actually fix for 2400.
Yeah. So what are you going to do? Eat your money or Bitcoins at 20? I mean, there'll be no food.
I would trade it. I would actually be long gold or oil, or any other soft commodities like sugar. No, I would actually do some physical trading in that. So sugar or wheat.
So why do you have a silo?
Yeah, kind of.
You could store it.
It's like a shipment. We can actually arrange for that.
You're like Joseph. You're like Joseph in the Bible. So you're going to buy, huh?
No.
Yeah. Anyway, so wow, that's all I could say about this. All the charts you've shown today, buddy. Thank you so much, my trading warrior brother.
Actually, there were 34 charts, so I've shown. I think I covered most of them.
Yeah. I mean, great. I'm going to go back and watch this one over again.
Yeah, sure.
To catch it, because so much and compressed in this amount of time. So the best way for people to follow you is at Ronit 9Q.
Yeah, that's right.
Okay, buddy. Remember that you're Elvis and I'm what was his name? What was Elvis's manager? What was Elvis's manager?
I have no idea.
Okay, well, it was like
but I thought you were Highlander. You said that you're 55 and it was 1929. So
not the
colonel.
was it? I don't think it was a colonel either, was it? Maybe it was.
Yeah.
Okay, Brock.
Maybe.
Anyway, I'm the Colonel, you're Elvis. Thank you for,
Thanks, Dale.
shake, rattle and roll in the markets.
Thanks,
Colonel
Dale.
Parker, that's right. All right, so thanks, Ronit. And everyone, you could join the team in 11 minutes on the Morning Edge. Hope you enjoyed Ronit's stuff. It's great. He sends it to me almost every day, his stuff. So my head explodes every day when I look at his charts. So
Really?
anyway,
I'll send some more.
all right, thank you very much, Ronit.
Thanks, Dale. Thanks,
Good
Dale.
hunting. Adios, everyone. Have a good day trading. Take advantage of the offer and sign up so that after we're done here, in 10 minutes, you could hear Steve and Blake and everyone, and they'll field your questions. Adios. Oh, I
See you
forgot.
guys. Thanks.
I forgot. Yeah. And don't
Wow.
just count your pips, count your blessings. I'll
Yeah.
see you guys. Adios.
Thanks. Bye.
Bye-bye.
Bye.